Welcome to the Spokane housing market update for April 2023. This one is important because the market has shifted. So if you're a seller who's tried and failed in the last 6 months to sell your home, I might have some good news for you. Likewise, if you're a buyer, there is still some opportunity out there if you know where to look. So let's take a dive into the data and see what's been happening with the housing market both nationally and locally here in Spokane. My name is Phil Wells. I'm a real estate agent that likes to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to start by getting a national picture of what's been happening. We'll look at pending home sales, we'll look at mortgage rates as well as mortgage application rates. We'll then look at data from the Spokane market itself and compare and contrast it to what's been happening nationally. Then we'll look at some news articles that have stood out to me recently before trying to piece it all together at the end and figuring out what it means for you. So let's get into it. Looking first at national pending home sales for existing homes. Just a note on these figures and the figures throughout the entire video, they are the latest that are available, but there is a lag when it comes to reporting data, particularly at the national level. So for example, these pending home sales that we're going to look at are from February. Contract signings were up in February 0.8%, which comes off the back of an 8% gain in January, which represents 3 consecutive months of month-on-month gains. Year-over-year contract signings declined 21.1%, which does represent 21 consecutive months of year-over-year sales declines. Now, mortgage rates in February of 2022 were in the 3.5 to 4% range, so that year-over-year number can be readily explained. So overall, pretty positive news there for home sales, and that's a welcome change. In the western region where I'm based, sales decreased 2.4% month-on-month and declined 28.4% year over year. Here's what the National Association of Realtors chief economist had to say about February's pending home sales. After nearly a year, the housing sector's contraction is coming to an end. Existing home sales, pending contracts, and new home construction pending contracts have turned the corner and climbed for the past 3 months. The deputy chief economist of the National Association of Realtors had this to say too. We definitely saw an early spring in the data. We have had the biggest jump in home sales actually since July 2020. And as is to be expected when demand increases, we actually saw a jump in national home prices after several months in declines this month. We'll cover these points in some more detail later, but mortgage rates are down, median home prices are rising, and buyer competition appears to be heating up. If you're a buyer, I've been talking about a window of opportunity for a while now. There's still a small breeze rolling through that window, but that window is rapidly closing. I have encountered several multiple offer situations just in the past month. I even had to get competitive with an all-cash offer recently on an investment property, where we had to radically restrict the scope of the inspection contingency just to win. Granted, that was a particularly good deal with high cash flow, but still, you understand the point. There are buyers out there right now determined to win. I still maintain though, you have the best market conditions right now versus any time in the last few years to actually get the property you want under contract the first or maybe the second time around. And when you're able to refinance that property, you'll be sitting with a good mortgage payment, you'll have got a low purchase price at the outset, and you'll have really set yourself up for success. Yes, rates are still high, and yes, rates suck a little bit right now, but ask yourself this question. Would you rather be refinancing when rates drop to 3%, or scrambling around trying to find a home, having a miserable time losing in bidding wars? Let's move on and look at mortgage rates. Obviously, most people use a mortgage to buy a home, so to keep an eye on mortgage rates gives us a really good idea of what demand is likely to do. Sticking with February for a second so we can really analyze that period in time. Mortgage rates at the start of February were at 6.04%, and by the end of February, they were at 6.85%. The most recent rates I could see have dropped significantly in only the last week to 6.16%. I mentioned just before that I believe buyer demand is coming back and in a big way, but it's an undeniable fact that mortgage rates are literally double what they were this time last year. So concessions from sellers, things like seller credits to cover your closing costs, are still on the table. However, I want to caveat that just a little bit. Where you encounter a very competitive home or a very desirable property in its first weekend, Asking for things like seller credits is going to make you uncompetitive. Sticking with mortgages and looking at mortgage application rates. This is a huge leading indicator for the overall housing market because it doesn't actually matter what mortgage rates are, it matters how many people are applying for loans. The Mortgage Bankers Association publishes surveys from lenders weekly, so we're able to get a really good up-to-date impression of what the market's been doing. Let's focus on February's headlines to round out that period of time and get a full national picture of what's been happening. What I'm looking for here is a correlation between mortgage rates and application rates. That tells me that the basics of supply and demand are working well and we don't have any weird resistance or blockage somewhere in the market. Survey for the first week of February, applications were up 7.4% week on week. For the second week of February, applications were down 7.7%, and for the third week of February, applications decreased 13.3%. Then for the final week in February, applications dropped another 5.7%. I mean, that's sort of what you'd expect to see. Mortgage rates throughout February, as we saw in the previous section, increased throughout the entire month. People aren't going to be rushing out to buy homes or refinance their home when rates are increasing. What would be interesting to look at is how the most recent decrease in mortgage rates has affected mortgage application rates. That survey isn't out yet, but I will come back and leave that information in the description to this video. Just for context, when it comes to mortgage rates, we are hovering around 30-year lows when it comes to application rates. So that goes some way to explaining the 21 consecutive months of year-over-year sales declines we've been seeing. Looking now at my local market, Spokane. I believe it's so important to get that national picture first before looking at what Spokane's been doing, because we're not a remote economic island. We're part of the overall United States, and if this market is acting differently to the rest of the country, we need to understand why. These are actual sales for March, so just be mindful that we're comparing pending home sales nationally in February with actual closed sales locally for March. Given that it takes about 30 days to actually close a transaction, I think it's a fairly accurate comparison, but it's not perfect, so just be mindful of that. Sales were down 22.1% year over year, which is more pronounced than the national year over year decrease of 21.1%, but is broadly in line with what's been happening nationally. And Spokane is performing much better than the overall Western region's year over year decrease of 28.4%. Median home prices are down on a year-over-year basis to $400,000, which is the fourth month in a row of year-over-year declines for Spokane. But it's worth noting that isn't the whole picture, because prices are actually rising on a month-on-month basis. Prices this time last month were $375,000, and before that they were $371,000. So we're definitely on an upward trend. That's why I do these video deep dives, because if you just looked at that one data point, you wouldn't understand the full picture and see that prices are actually rising here locally, as they are nationally. Inventory is up to a 1.3 month supply. That means that if no homes were listed for the next month, we'd essentially have no homes on the market to buy. That's not how an economy should run. We should definitely have more supply. More on this later when we look at news articles, because the city council here in Spokane has been up to no good. That low inventory though, I believe, is what's causing a spike in demand and what's causing prices to increase. New listings are down 7.6% on a year-over-year basis, which isn't great and isn't what I would have predicted. I would expect to see new listings pick up as we head into spring and market conditions become more favorable for sellers. This means that overall Spokane is tracking the national picture pretty closely. I think it's fair to say that Spokane isn't behaving like an outlier, and you can expect national macroeconomic news to impact Spokane just the same way as it would impact anywhere else. Now I wanted to touch on a few news articles that have stood out to me this month. As always, there's a lot going on, so we're not going to read these articles in their entirety. We're just going to touch on the headlines and the key points in the articles, and if you want to read the whole article for yourself, I leave my sources in the description to this video. The big news this month, we had a few bank failures, a few bank bailouts, and a few forced mergers of banks. Obviously the headline bank being Silicon Valley Bank, but I believe one of the most important failures happened with Credit Suisse overseas. If you're interested in the banking situation, you can get a much more informed opinion elsewhere. What I'm interested in is what the Federal Reserve is going to do off the back of that. Is the Federal Reserve going to get shiny object syndrome and pivot away from its fight against inflation towards shoring up the banking system? Firstly, let's briefly touch on those inflation figures like I do every month. Inflation in February was 6% flat, which is 8 consecutive months of month-on-month declines in the rate of inflation, since its high in June 2022 of 9.1%. The Fed also upped its Fed funds rate again. We're now sitting at an even 5%. I am hopeful for lower inflation, and it does seem to be trending down, but I am a little bit concerned about this banking situation. Well, not so much the banking situation, but the Federal Reserve's potential response to it. Bailouts are cash injections, which are by definition inflationary. We don't need massive economic stimulus, just as we seem to be getting inflation under control. I listen to a lot of financial news throughout the month on podcasts and various other sources, and there does seem to be a consensus forming around a Fed pivot. That's where the Fed pivots its attention away from inflation and begins to look at doing something else, potentially stimulating the economy or shoring up the banking sector, which are pretty much the same thing. I, for one, would like the federal funds rate to stay higher for longer so we can be really certain that inflation is under control. This is going to suck for home buyers for the short term, but I believe it's the right call in the long term for the overall economy. As this article highlights, it's really not a bullish long-term play to pivot and stimulate the economy right now. Really quick, high interest rates suck if you're buying a home, yes, but if you're saving for a home, please make sure you're maximizing your returns by getting a good high interest rate savings account. If you look at the big banks, they suck as always, but your local credit unions or local banks are actually offering some really good rates. I've seen CDs in the 5% range recently. That can really help you save up faster. Now I wanted to highlight a weird rift that seems to have opened up in the US housing market. Prices are falling in the West, but rising in the East for the first time seemingly ever. That's pretty good news if you plan on selling your home in Rhode Island and moving to Spokane, for example, but it is something to be aware of for everyone else. This pattern of geographical disparity is highly unusual, if not unprecedented, housing analysts say. We've never seen anything quite like this, where it's so stark, east to west. Pretty unusual, but there's opportunities in every circumstance. So maybe if you're on the East Coast and plan on migrating west, it's the time to do it. Or if you're an East Coast investor, maybe the West is somewhere you want to look for your next investment. Moving on and looking at a number of anti-housing measures that the city of Spokane and Washington as a whole are implementing or have already implemented recently. Now, I will give these lawmakers the benefit of the doubt. I do believe they're trying to help, but they are implementing measures that are going to cause people to just leave the state, or in the worst cases, force homelessness. We've seen these policies play out and fail in cities like Los Angeles. Recently, the city of Spokane voted to increase the regulatory burden on landlords, and despite the mayor's best efforts to veto the proposal, the council was able to override that veto and the ordinance actually passed. Not content with that, secondly, the city of Spokane has decided to increase the fees on new home developments. Here is the reasoning behind the measure. It is time to fully implement updated rates, so that those that are creating the need for increased infrastructure bear the cost. The idea behind the measure is that the extra fees will go towards infrastructure, things like roads and sewers. But this comes at a time when our overall property taxes for the area have gone up 6% in just the last year, sending the message to me at least that their failure to plan means a penalty for me. The knock-on effect for this is that home builders are cancelling or delaying plans to build thousands of homes in the area. Approximately 2,000 projects have been put on hold. That's projects, not homes. There are duplexes, triplexes, quadplexes in there. That's thousands of extra homes that aren't going to be built this year and into the future because of this poorly thought out policy. Fine work, City of Spokane, fine work. These measures are going to make existing homeowners a lot of money in terms of equity, so I'm grateful for you there. But you're going to cripple people's ability to get on the housing ladder. Not to be outdone by Spokane, over in Olympia, the state is trying to make our real estate excise tax among the highest in the nation. Remember that low inventory I mentioned before? Well, this will make it less appealing for people to list their home for sale now. And when homes are listed for sale, you can bet your bottom the dollar that they're going to be proportionally more expensive to account for this extra tax burden. These measures are directly counter to affordable housing. Increase the bureaucracy on landlords and rents are going to go up. We've seen that everywhere that these measures have been implemented. Increase the cost to build homes and home prices go up. Increase real estate excise tax and home prices go up, or people just stay put in their homes for longer. Meaning that we're going to be in the situation where people have many vacant rooms in a home, but they don't want to sell. Meaning that a young family, for example, needing a home with those rooms is going to find themselves in difficulty. Nothing introduced here in the past month or so makes sense if you truly want to provide affordable housing. Now let's try and piece all this information together and summarize the market as we see it in April 2023. The big news is that inflation, which is the key reason behind these high interest rates, is trending down, but it's still too high. With the recent bank failures that we've seen, the Federal Reserve is beginning to signal that it might be losing its interest in the fight against inflation. But many are saying that a pivot now would be very detrimental to the economy, just as we're starting to get inflation under control. Nationally, the most recent report we can see for pending home sales shows an increase in pending home sales. We're also seeing national median home prices rise too. And mortgage rates have dropped recently down towards the 6% range. In terms of Spokane specifically, sales are down here on a year-over-year basis, and inventory is still woefully low. Home prices, though, are increasing on a month-on-month basis. If you're a seller, know that buyer competition is heating up and home prices are rising. I'm seeing time on market drop, and for those most desirable homes, I'm starting to see multiple offer situations. So you can still sell your home. It's not the best time to sell if you want to get top dollar for your home, as I highlighted before, but it's actually possible again, which is welcome news to those that might have tried and failed in the last 6 months to actually sell their home. I have experienced multiple offer situations when representing buyers the last month. I've had to use things like the escalation clause, I've had to use an appraisal gap provision this month, and I had to severely limit the scope of an inspection contingency this month too. These are tools much more commonly associated with the seller's market. I'm not for 1 minute suggesting we're in a seller's market, but we're certainly not in a buyer's market either. If you're a buyer, your window of opportunity is closing. We're not in a buyer's market anymore. We're in some sort of weird bounced market. It didn't happen naturally, but that's where we're at. So I'm more convinced than ever that it's up from here for the housing market. If you want to buy right now and you're looking at a home that's newly listed and is very desirable, you're going to face some competition. We're talking about maybe paying thousands of dollars more, but it's not tens of thousands of dollars more like it would be if rates were at 3%. And if you like the looks of a property that might have been on the market for a little while, then there are still some deals to be had. That's absolutely true. So I maintain that it's still possible to get a good purchase price right now. As I highlighted before, purchase prices are down from their recent highs. And in the future, combine that good purchase price with a good mortgage rate when you're able to refinance. But like I said, that window is rapidly closing. Don't forget too that we are in the middle of an inflationary cycle, and what's one of the best inflation hedges out there? The 30-year fixed mortgage. That mortgage payment isn't changing for 30 years unless you change it by deciding to refinance to a lower mortgage payment. That's it for this video. I hope you gained from this video. If you did, please like and subscribe. That really does help me out. Please go and follow me on Instagram. That's where I'm most active. If you're looking at buying, selling, or investing in the Spokane area, then please feel free to reach out. Give me a call, shoot me a text, send me an email, and I'd be honored to work with you. Until the next one, my name is Phil Wells, and thank you for watching.